BRICS challenges the dollar. How this economic war is shifting global dynamics. The global financial system is undergoing one of the most dramatic power shifts in modern history. For nearly 8 decades, the US dollar has stood as the undisputed king of international trade, serving as the world's reserve currency. But now, a coalition of emerging economies, known as BRICS, Brazil, Russia, India, China, and South Africa, recently expanded to include nations like Saudi Arabia, Iran, Egypt, and the UAE, is openly challenging that dominance. This new economic confrontation isn't fought with missiles or armies. It's being waged through currencies, trade agreements, and energy markets. A subtle but powerful war that could reshape global financial order for generations. Since the end of World War II, the dollar has been the lifeblood of global commerce. Oil is priced in dollars. International debt is settled in dollars. Even countries with weak economies have relied on the dollar to stabilize their trade. But this dominance comes at a cost, for others. It gives Washington immense power to impose economic sanctions, control global payment systems, and influence international lending through institutions like the IMF and the World Bank. Over the past decade, the BRICS alliance has evolved from a loose economic forum into a strategic coalition. Together, these nations represent over 45% of the world's population, around 30% of global GDP, and a rapidly growing share of global trade and energy production. In recent years, BRICS members have openly discussed the idea of a shared currency, sometimes dubbed the BRICS coin, to settle trade outside the US financial system. This effort is not just symbolic, it's a direct response to Western economic sanctions and dollar dependence that limits policy independence for many nations. One of the most significant developments fueling the BRICS challenge is the growing trend of non-dollar oil trade. China has begun paying for oil imports from Saudi Arabia and Russia in yuan. India has experimented with paying for Russian crude in rupees. Russia, under Western sanctions, is aggressively promoting non-dollar transactions with its trading partners. If energy, the world's most traded commodity, starts moving away from the dollar, the implications for the global economy will be historic. The creation of the new development bank, NDB, often called the BRICS Bank, is another critical step in this movement. Unlike the IMF or World Bank, which are dominated by Western influence, the NDB offers loans and financial support in local currencies. This bank, along with bilateral trade agreements denominated in yuan, rupees, or rubles, signals the beginning of what many economists call De-Dollarization, a gradual but significant move away from the US currency in global finance. If the BRICS alliance succeeds in reducing dollar dependency, the entire global financial ecosystem could be transformed. Emerging economies would gain more independence in trade and policy. The United States could face reduced demand for its treasury bonds, raising domestic inflationary pressure. Global markets might become more diversified, but also more fragmented and volatile. The shift could mean a multipolar world economy, where power is shared among multiple currencies: the dollar, euro, yuan, and possibly a BRICS currency. Despite the ambition, the BRICS project faces serious hurdles. Internal competition among members, China versus India, currency instability in weaker economies, lack of unified political vision. Moreover, global investors still view the US dollar as the safest asset, especially during crises. The trust, liquidity, and depth of American financial markets are unmatched, for now. The challenge from BRICS is not about destroying the dollar overnight. It's about building alternatives, a slow, strategic process that's already underway. In the next decade, global trade might not revolve around one currency, but around several. The age of the dollar monopoly may be ending, replaced by a multi-currency world order shaped by shifting alliances, economic nationalism, and technological change. The economic war between the West and the BRICS bloc isn't just about money. It's about power, sovereignty, and the future of globalization itself.